Do you feel like your bank actually has your back? Now, the thing is that when economic times get tough, like the world that we're living in today, some banks will slowly but surely start to push you out the door without ever saying it directly. And from a banking standpoint, I completely understand why they're wanting to do this. They are wanting to ultimately de-risk their book of business. And right now, the way that your numbers are structured or organized or lack thereof, they are looking at you as being a higher risk investment for their book of business. And this is why when times start to get tough, you start to hear things around the community about people getting pushed out of banks. But one thing you need to know is they'll never say it to you outright. They'll just start slowly making things a little bit harder or dragging their feet on some decisions or getting answers back to you, secretly hoping that you make the decision to leave on your own so that they don't have to be the bad guys in the community and push you out the door. So if you felt like you've been in a position before, or maybe you're currently in it, where you feel like your bank is kind of pushing you out the door, you're not crazy. Now, inside today's video, I'm gonna walk you into the back door of the bank and essentially show you two key differences that not a lot of people talk about between investment capital and relationship capital when working with your banking institution, and how making the right decision between those two things can completely change the future trajectory of your farm operation. Now, the average farmer in America today doesn't have any game plan when they're walking into the bank. They're not structured, they're not organized, they don't know their numbers. They're honestly walking in there with nothing more than hoping and praying that the bank says yes or restructures them or renews their loan or whatever it may be. But everyone, when they get pushed out, they want to act like they're blindsided by this decision. And some people rightfully are, but a majority of them, they're not. There are signs that were popping up there that they just chose not to pay attention to. But here's the deal. You don't have to let your bank make the decision for you. You can absolutely be in control, and we've proven this over the years with all of our customers inside of Legacy Farmer, but you have to do it in the right way, and you have to understand exactly what the bank is looking at and understand their position and their risk inside of your operation as well. All right, so let's talk about the difference between investment capital and relationship capital. Most farmers today are walking into their bank focused on number one, which is investment capital, right? You're trying to get capital in order to invest in your operating or working capital or buying things or whatever it may be. We're trying to get loans in order to run the business and making sure that we have enough money to operate with and buy things and stuff like that throughout the year. Totally get that, right? This is the form of investment capital that I'm referring to. But the problem with this, though, is that if you're solely focused on just investment capital with that bank, there's one thing that you're probably really focused on, which is the interest rate that you're getting at that bank as well. Now, totally get where people are coming from on this, but at the end of the day, you need to look at the cycle that we're in from an economic or macroeconomic viewpoint here, because what I mean by this, and the reason I'm even filming this video today, is because we're obviously in a tough economic environment inside of the farming and ranching world. And as of today, not every decision is about interest rates. Not every decision is about you getting more working capital or investment capital from your bank and getting more money from your bank, essentially, right? Not every decision is revolving around that, because some people are just in a place where they're hoping their bank renews their operating line of credit so they can continue to farm next year. Totally get that. But it's in times like today where that relationship capital starts to show up inside of your bank. And what I mean by that is, yes, you want to make sure that you're positioning your numbers, you're structured, you're organized, you have clarity, you have a game plan, all of these things here so that you can get the best interest rate in the bank and be able to get investment capital when you need it, aka loans or money to run the operation. But man, when times get tough, this is where the conversation starts to transfer over to relationship capital, because your banker, yes, they're important when times are good, but they are 100 times as important when times are tough here. And so when it comes to working with these different banks here, with our customers in Legacy Farmer, yes, we're focused on making sure that they're structured, organized, have all their numbers in order, and are honestly in the top 1% of organized customers that bank will ever have, so that we can always make sure that they're getting the absolute best interest rate on whatever loans or things like that, right? That's the conversation from an investment capital standpoint. But the position that our customers are in is that we're not just making a decision based on what bank can give us the best interest rate. Now we have to start making the decision based on relationship capital. And most people, they never get to this point, but it's such a critical thing here that you need to understand as a borrower of your bank here, so that when you're going in, you need to be interviewing your bank, not only, again, from an interest rate position, totally get that, right? We want to make sure we're getting the most efficient or low cost interest on our debt that we possibly can. Totally get that. But you need to be interviewing the people inside of that bank as well, and especially your loan officer, because when times get tough, which they always will, every single business I know in every industry, you are going to go through hard economic and turbulent times. You want to make sure that whoever is providing your investment capital, you have invested in that relationship, because if you haven't, guess what they're going to do? kick you out the door the second their risk profile on your operation goes above what their lending standards are inside of that bank. And this is the type of crap that happens over and over and over again, because farmers and ranchers and bankers at some level are so focused on interest rates and investment capital and all that type of crap. Totally get that. But they don't focus enough on relationship capital. So one example here that I will give you is I had a customer that contacted me last week saying, hey, Jace, one of my old bankers that I had a great relationship with for a decade moved to a different bank. He's trying to get all of my business back. But the thing is, though, is that I've been with my current bank now for more than 5 years. They've been great. They've worked with me through tough times. They've done all these things well. But my old banker that's trying to get all my business is offering a 1% better rate. Now, when it comes to that type of decision, this is what I told that customer. I'm like, okay, great. So you're in the financial situation where you can go to any bank in the region. That is clear, right? He can get investment capital from whatever bank he wants to. They will be happy to have him because he's a low risk customer, because he's so well structured and organized financially. This is where he is fortunate enough to be in the financial situation where he gets to make the decision beyond just investment capital, because that's where I took the conversation to. Based on the relationship that he has with this current bank and then this old loan officer, which ones does he want to preserve that relationship capital with? Because there are going to be hard economic times that come up in the future. Which one do you feel is going to have your back? This is a critical thing you need to be asking. And at the end of the day, your relationship capital is worth more than 1 or 2% of interest rates that you'll be saving by moving banks. And I know that's completely contradictory to what a majority of people think inside the industry, but it's the absolute truth. You need to be considering these things here. And when you're moving from one bank to another because they're giving you, 100 basis points or 200 basis points better rate on some loans or whatever it may be there, you need to understand and put a weight or calculation on the amount of relationship capital that you are risking by moving over there. Because at the end of the day, the things that get people through hard economic times is not investment capital. It's the people that are involved with you during that time. You need to have people that are in your corner that are willing to ride that storm with you and weather that storm with you to get to the other side. Now, out of a 10-year period, when it comes to farming and ranching, typically 7 to 8 of them, most people are losing money or they're breaking even or pretty close to it. But most of them, though, a lot of them, they're losing money. You may have 2 or 3 really good years. You want to have solid relationships with banks that are, 1, they're going to obviously be with you in the great years, but 2, they're going to be with you in the tough years. And the really tough years. They're going to ride those things out with you. They're going to weather that storm with you. That's the type of relationship capital that I'm talking about inside of this video. And that's why you need to have a clear understanding of the difference between investment capital that you're going into the bank for and relationship capital that you're going into the bank for as well. This is such a pivotal thing that a majority of people, they don't think about. And then farmers will come in and they'll move their loans over to a new bank because the bank is offering 1% or maybe 2% better in good economic times there, because everybody can get a better interest rate in better and good economic times. And then all of a sudden 2 or 3 years pass by, they hit their first tough year and that bank is kicking them out the door. And then what do they go running back to? The bank that had them all along here. So these are just some of the things here that you need to consider when it comes to making this type of decision. Now, with all of our customers, like I said, from an investment capital standpoint, our customers, they get to choose where they want to bank at, primarily because they're so well structured, they're so well organized, they are low risk credit for any bank. So any bank can have them. This is where they're able to graduate that decision to the level of, hey, I'm not making this decision just based on investment capital or interest rate I'm getting at the bank. I'm now moving into, okay, who's the person I'm working with? What are their core values? How does this bank treat their customers? And more importantly, how does this bank operate when times get tough? Do they kick people to the curb? Are they slowly but surely pushing people out the door? Because those are the red flags here that I'm going to be looking at as a business owner when it comes to making these decisions. You are stepping into a relationship with your bank, and that's why this relationship capital here is a huge focus point that I think all farmers, ranchers, and ag business owners should have when it comes to making a decision on who they're financing with and who they're banking with at the end of the day. So guys, this is the type of stuff here that we help our customers with inside of Legacy Farmer every single day. And the foundation of this entire conversation starts with you getting structured and organized with your numbers so that when it comes to going to banks for investment capital and getting the best interest rate, you already got that. And you know you have that to where now you can graduate to really interviewing your bank and choosing who you want to work with and starting to make that decision based on relationship capital, not just investment capital. So if you're ready to be in that type of position with your operation, click the link below this video to learn exactly how we're doing that with hundreds of family farm operations inside of Legacy Farmer today.